Hello, this is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. So, I wanted to go over one of the most important things that you could ever understand as a first principle when trading successfully for crypto or stocks. It may seem like a basic concept, and it kind of is a basic concept, but it is so important, and I noticed that a lot of people haven't quite understood this. But what it is trading with the trend. And I'm going to show you some different charts. Right here, this is just Webull, and the reason I have it with just a line chart is because I call this a diagnostic check or a health check, where I can just kind of click through the watch list to just gauge where a stock is at, what it looks like, and then I can go into my other main charting system and look at candles, momentum, indicators, chart patterns, things of this nature. So as an example, on this line chart, this blue line is the actual stock price, okay? The green line is a 9 EMA. The purple line is a 20 EMA. The yellow is a 30 EMA. The blue is a 50 EMA. And the purple is a 200 EMA, okay? Now, a long time ago, back in the 1900s, there was a man named Charles Dow. Charles Dow created what's called the Dow theory, and not only did he create that, he created the Dow index, which at that time only had 11 stocks. Now it has 30. And Charles Dow used to write for the Wall Street Journal and express his theories. And two main theories that he had that still stick to this day are, one, trading with the trend, and that is a macro trend, a secondary, and a micro, and we'll go through all that. And then the other thing that he noticed is the economy, better said, the stock market reflects the health of the economy. So it is actually a gauge or a barometer of the health of the economy. So based on jobs, inflation, GDP, and with everything that's been going on lately, I'm sure that makes a lot of sense. As there's been a lot of strange things going on, you've seen it kind of go down lately. So the Dow theory is essentially the stock market will reflect the health of the economy, okay? And he realized that if you trade with the trend, you will have a much better shot at being successful and to make money. So the first thing that you need to know is you always want to be above the purple line, okay? If you're going to be bullish or trading to go up in the stock market, okay? Now, if you want to short and you want to go down, then you want to be below the 200. So this particular stock is called, this is Asana, okay? And Asana is doing okay. It's doing pretty good, and it is also above the 50, the 30, the 20, and the 9. Okay. Now, if you notice right here how they all bunch up, when they get above the, when it's bearish, it goes below. How do I say this? Let me find a chart. So let's find a horrible one. Okay, let's find this. This is C3.ai. Okay, C3.ai has fallen below the 9, the 20, the 30, the 50, the 200. It's fallen below the 200 ever since March 1st, 2021, and it has just dove down and dove down and dove down. We don't want to buy this, okay? But notice how the first thing it's going to go through is going to be the 9, then the 20, the 30, the 50. So it's actually going to go in reverse. So back to Asana, in a bullish trend, what we want to do is we want to look for places where they bunch up and you want to get in. And when you get in, you have an opportunity to make a decision, and this is your decision, okay? You can be a tight trader and you can stay in until it comes down through the 9. So if you were to buy here at $30.89, you would ride it all the way up here until it violated the 9 at $66. So you'd be over 100%. You'd be out for a little while and you jump back in, you make a little bit more, you come down, you get out, and you just, rinse and repeat. You buy back in right here, you sell right there. Now, some people like to use the 50 because they don't need to trade as much, okay? The 50 is the blue line. So you would buy in and you would just let it ride. And notice how the blue line it's come down through the 9 and touched the 20, come down through the 9, come down through the 9, touch the 20. And over here it came down through the 9, touched the 20, but it bounced off the 30. So if your stop loss was always being reset at the 50 EMA, you'd still be in this thing, and you'd be in it from about 31 bucks, and currently you would be at 107. So you're looking at 300% and not even having to trade. So if you just understand the simplicity of when to enter and come up with a reasonable way to exit, that's a wonderful way to make money. And there's a lot of stocks right now that are in correction territory and bouncing off the EMA. One of them that's a juggernaut was Visa. Visa came right down to the EMA. Another one, here's a great one that people like and I like as well, Palantir. So yesterday I bought Palantir because it came down to the 200 and it started to bounce, and I bought it right on that bounce. Now it's a little dangerous buying it before all this, but I set my stop loss right here. So I don't have a lot of risk, but I have a ton of reward. I noticed that the last time it did it, it made a $5 move, came down, and last time it went from here to here was also a $5 move. So I'm expecting about another $5 move. Okay. We'll get into impulse theory, magic T theory, and similarities in patterns and the characteristics of or personalities of particular stocks at another video. But for right now, I just want to focus on riding and trading above the trend. So Palantir, as an example, has a good little health check. Now let's go look on a different chart here. See if we can find Palantir right here. Okay, so Palantir. Now I've been in Palantir. I've been in and out of this thing for a long time, since way back here. Rode it all the way up, kind of held it, got out, saw it change here, rode it up, got out, got in here, got out, and then I just got back in. Now, how did I know to do that? Well, first of all, let's get a little drawing tool. So way from back here to way up here, we're going up. See the line? Okay, that's the overall trend. Okay, this right here is the secondary trend. Okay, that means that if you say, I want to buy this stock and I'm bullish and I want to make some money with it, I need to first verify that we're in an uptrend. And then since I missed this whole move, I need to wait for a good entry on the secondary part of the macro trend, which is right in here. Okay, let me just delete that. I don't want it there. Okay, so now how do I know to jump in here? So I use Heiken Ashi, which is momentum based. So what happens is it shows the purple candles, which are red days, and there may be several green days in here, which will shrink the momentum length of the candle. When it goes green, which it did right here, and it was pretty much a doji, which is an indecision candle showing a reversal, I now know that it's coming, especially because it came with volume. Now, what else happened? Okay, I'm in an uptrend, number one. I see a curvature on my 9. This is the 9 ribbon right here. It's 5 to 9. I get that indecision blue candle. I get volume. I see that the RSI is flirting and wants to go above the overall index, meaning it wants to outperform the NASDAQ. Okay, that's huge. It hasn't happened yet, but it's about to. So I wait a little bit, and boom, what happens? My vortex crosses, my stochastic crosses, and my RSI goes above. I take the trade, and boom, 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 boom. We make a lot of money. Same thing here. We get that small momentum. We go from these big candles to a small candle. And I noticed it wicked up and got pushed down. That means that buyers tried to get it up, and then the sellers pushed it down. So I knew right there it was a warning shot. Okay. What happened? Volume was lower than the day before. The RSI is coming below the NASDAQ, the vortex is coming down, and the stochastic is now crossed. So what do? I get out and sell, and I take my money, okay? And I just wait, and I keep it in the watch list. Now, I had created this pattern, which is kind of like a symmetrical triangle. It's a little lopsided, but it's pretty close. And I had the secondary pattern in here because I'm looking for breakouts. And right here was a good example. It kind of came above, but it didn't have the volume. Notice it didn't have the volume. It did increase, but it wasn't massive. But the next day, it had the volume. It went and it just went on fire. Boom, boom, boom. Okay. So what happens is you see this go over, you see this cross, you see this cross, you get your first blue candle, you're looking for volume, and you know to get back in. You're trading with the trend, okay? That's swing trading, all right? Now, we'll get into stop losses, and we'll get into all kinds of different ways to do that. I have about 4 different ways that I can show you to set a proper stop loss, and you can kind of choose what's best for you. I use all of them, but I use them based on the characteristics of the actual stock. Okay, so some of them just kind of cruise real slow, and some of them are like Tesla, where they're up and down, and that's just an example. So back to our little health check over here. Let's go take a look at the opposite. Okay, so let's go look at something. Oh, here's a good one. Okay, I just took this trade. Okay, I just bought into it yesterday. Now, why did I buy into it yesterday? For the exact reasons that I was explaining. It was above the 30, the 50, the 20. It crossed the 200, and right there when it crossed the 9 EMA, it was kind of like game on. I saw the RSI was coming up. This blue line was above. The blue line is slightly over, and I just went ahead and set this is a 9 EMA, I just set the stop at the 10 EMA. Worst case scenario, you're going to lose a little bit of money if something goes wrong in the news. The Fed comes out with something weird, something happens in China, these things do happen. But know this, the most that you're going to lose is going to be when you take the trade, okay? Because as it goes up, you get to move your stop up. All right, so as long as you have a pattern, a system, and a process, your lowest risk is when you first take the trade. So, it crossed the 9. I put it, just right below it. If it goes down $1, I lose. But we can see what happens when this thing runs. It goes up 15. That's $2-3. So, you're at a 3-to-1 risk ratio. So that's a really good way to do it. You could also, we'll get into some of the other ways to set a stop later. But basically, I'm above the 200 at the very beginning where everything's bunched up and this thing could run. Now, I'm looking for more volume, obviously, but everything else is kind of lined up. The one thing about SoFi right now that is a little sketchy is everything is good. We're above all the trends. Where RSI's coming up, this is looking good, this is looking good, everything's looking pretty good, except the volume is a little low, and you can see it only had 37 cents positive today. It needs a little bit more of a push. We can actually go look at that in our volume and see that the average volume is 20.93 million shares, and we only did 11.9 million shares today. So that's the only thing. Volume really does predict price. You really need to pay attention to the volume, whether it is green and growing with the trend. That's what you want to see. You want to see how this blue line's coming up and these green ones are going up. That's volume with the trend. That's very, very important. And later we'll get into volume and how you can, I've been able to tell that we have a lot of distribution volume going from Wall Street and institutional investors, and exactly what days and what's going to happen in the market because of that. And that's a distribution phase. And then, once the correction kind of comes down, you get to the accumulation phase. And then usually retail comes in, which is called the participation phase. And we'll go through all that fun stuff. But right now, I just wanted to go through trading with the trend and how important it is. We shouldn't really be buying stocks like, let's see if we can find an example in here. NIO. NIO's a popular one, okay? Now, look, if you're a long-term holder and you love NEO because it truly does have good fundamentals, it's just taking a beating right now because China. It is a great company. If you're already in it and you bought up here, you can average down. But I want to teach you how to come in on the perfect technical entries. Um, it's not really advised to be buying again when you're under all these because this thing could certainly come down. And this one we really need to go look at NEO on a real chart here. NEO, yeah, it was down a tiny bit today. So, my friend NEO, I know a lot about this one. All right. On this chart, this purple one is the 200. Okay, you're below it. Your EMA ribbons, these signify a 20 through a 50, and they're red. So not good, right? So what's going on with NEO here? NEO's volume is low. I have all these lines because this is kind of a ladder step breakdown. What I'm looking for is not only the momentum to shift like it did here, and there to be good volume and us to be over, outperforming the index, above on our blue line here, and across on our stochastic. And you want it to all happen at the same time. So I'm just patiently waiting for this to come down. I think it could come down all the way to $30.29 or $30.36. And then I'm sure there's going to be a lot of support, not only from institutional, but also algo support. And you can see that it touched here before. I do have a feeling it could come down that low, or it could just start to turn. But we want to see that blue candle. We want to see volume. We want to see this blue line coming up. We want to see the purple line coming down, the blue line coming up, and we want to see this cross. Okay, it's not just about the RSI being low or the RSI being high. I know a lot of people think that. We want to make sure that we are in the right sector and that we have a leading or performing stock that is outperforming the other stocks in that sector against its index. Okay, you want to match that with high composite ratings. We'll get into all this different stuff. But as far as charting, if you're going to buy the dip because you're investing long term, I suppose that's okay. I personally wouldn't recommend buying it until it came down and found a bottom right in here, about 30.44, or started showing blue momentum candles and then had a base breakout above this little pattern. Let's see if we can enlarge that. Maybe make something here. Notice how it's made this little base here. This is a base to watch, and it looks like it has created a lower style over here. So this is, it's consolidation, basically. Let's go ahead and do a, is it in here? Maybe it's over here. No, where is it? Oh, right here. Okay. So let's just do this. So we have a little base. This area right here is kind of the box. This is like the area of confluence, if you will. And, you're going to have to break through this first part, get through this, and kind of get through that to satisfy me. Okay. And if you get through here, that's considered a breakout of this new base. But you're also getting a breakout of this pattern and then a breakout above support. So I think if you come down, you retest it, you kind of come through here, you got a pattern break, a support bounce, a secondary minor break, and then another resistance, and then a big resistance, and you get here, and it's kind of game time, okay? And it's probably at that point going to be heading, all the way back up. So you want to trade with the trend. Right now we're in a downtrend. It's obvious. Okay, our EMA ribbons are red. Our 200 EMA, we're below it. We're in a channel that's coming down. We have a ton of purple, which is red candles. Just my charts are purple. And NEO does not look like we want to be involved unless we're shorting. And if you wanted to short with the trend, then what you would have done is you would have set your stop right in here, okay? And when you would have rode all this up, and when it hit here, you would have been stopped out. And then when it made its first lower high and candle, you would have shorted there. and you would just be riding it all the way down. Again, trading with the trend. So that's kind of what I wanted to go over with you. It's really, really important that you are focused on getting in stocks when you're above these EMAs, because especially this 200 and the blue 50, they're showing the direction of the trend. They're smoothing out the days. 50 days, 200 days, they're smoothing it out and they're showing you the direction. As you can see, this is kind of going up, you're kind of going up, and then it's kind of leveling off, and then it's kind of, starting to come down. So, this thing, it could come way down. I'm not saying it will. I don't think it will, but it could. But look at the volume. Look at the volume. It's just coming down and down and down and down. That's not good. That means that people are selling, less people are holding, people are not buying as much. So, you don't want to just be buying the dip and then, it come down and down and down. As far as that, that's how you get hurt and you lose all your capital. Is A, not entering correctly, B, working against the tide or the trend. You definitely don't want to buy the dip and it be a falling knife. As an example, let's go find one of these really ugly ones called Beyond Meat, okay? Now, here's a little story for you. You got this guy, his name is Jimmy, and Jimmy, he's been drinking a lot of beer, he's been eating a lot of burgers, a lot of fries, he ends up going to see his doctor, he gets some lab work done, and the doctor's like, your glucose levels are high, we gotta put you on medication, you're type 2 diabetic. He's like, what are you talking about? I'm good to go. No, man, you gotta take this medication. So, and you gotta work out and you gotta eat better. So Jimmy, he goes down to Costco and he buys himself some Beyond Meat, plant-based, and he's like, he cooks it up and it doesn't taste good. It doesn't smell good. I apologize. It doesn't smell good when he cooks it, but he can tolerate the taste and it's okay. So in his newfound diet and his newfound knowledge for health, he decides that he's going to invest in Beyond Meat. So he sees this over here at, say, 183, and it drops over here to 169, and he's like, that's a pretty good deal. I'm saving, $14. So he buys it. And it comes down, and he's like, "Oh my God, I'm down. I'm down $18. That's $1,800 for every 100 shares." So he buys more, and then he buys more. He buys the dip, and then it comes down, and he buys more, and it comes down. He buys more, and pretty soon he can't even afford Beyond Meat anymore for his health because he's just gotten so ruined. And even when it comes back up, he never got to even, and he wanted to hold. And lo and behold, this thing just kind of came down and collapsed on him, and he's worse off than he even was. So buying the dip, every pro trader, there's not a book in the world that you can find that somebody advises you to buy the dip. There's just not. They actually all warn, do not do it. You need to have proper technical entries, validate a bottom, buy into strength. The buy the dip mentality is a mentality from basically inexperienced retail traders. It's not actually a good way to do it unless it's investing long term. Okay, now then you can buy the dip, but still at support levels, and that's a totally different thing. I'm speaking specifically about trading, swing trading, and day trading, mainly swing trading, because day trading you're going to be watching on the low time frames, and you're going to be waiting for those candles to come down to essentially buy a dip. So for investing, you can do it, but you got to be technical. You got to understand charting. It's very important to understand fundamentals. Don't get me wrong, that's critical. But it's just as important to understand the technicals, because when you go to college for this, or you work on Wall Street, or they all work off of charts, just so you know. They work off earnings reports and charts, and they put them together. It's not one or the other, it's both. And then as far as like algo trading, a lot of them are set right here at supports to protect their investments, and a lot of them will be set at the 200, and if it just breaks through, it's about to get dirty. And Beyond Meat has just been relentlessly going down, and from its high of 221 to today of $100.40. So it's over 100% drop. That is vicious. Jimmy is crying himself to sleep. He can't even afford Beyond Meat. In fact, he hates Beyond Meat. He's hitting Tattoo Chef at this point, and it's all good. But he learned an expensive lesson. Why you don't buy the dip. I guess if you have a lot of money and you want to be loose with your investments and you're willing to bag hold for a long time, great. But how are you going to put more money and more capital in if you're not buying at support, setting your stop right below it, getting 3-to-1, 4-to-1, 10-to-1 odds on your money with a high probability and a low risk, and working with the trend. So again, my name is Chris. This is Wheelhouse Trading. I hope this helps a little bit. Welcome to the Wheelhouse.